So let's recap on what we learned last time. Investing passively is the cheapest and most effective way to spread your risk. Because their holdings are restricted to a relatively small number of stocks, active equity funds are more volatile than passive ones. Active fund managers charge a premium for funds that invest in more than one asset class. And over the long term, once charges are taken into account, the passive investor will always fare better than the average active investor. Let's look now at the impact of investing on our general health and well-being. Time and again, surveys have shown money is the single biggest cause of stress in the Western world. We worry about it more than health or relationships. Recent economic woes have only served to increase the pressure on everyone to spend and invest what money they have as wisely as possible.
Investing, or anything really which involves reward, activates pathways in the brain which secrete pleasure chemicals, what we call endorphins. So when you're feeling a bit of a high or a buzz from having anticipated a reward or thinking about you're going to make some money, you're going to get a very good rush of these pleasure chemicals in the brain. What happens is that people get almost addicted to that rush and they want to get more and more of it. But the downside of it, of course, is when they lose money or things don't turn out as planned, there can be a huge dip in the feelings and in the chemicals that are secreted in the brain.
I'm thinking of someone I saw quite recently, and in fact he hadn't told his wife about, some of his investments. And I mean, they're going to have to sell the house, kids' education is going to be affected, and I think the marriage is really seriously under threat now. Because this guy wasn't very upfront about what he'd been doing. He thought investing was going to be a solution to many of the problems he was experiencing, but in fact it wasn't a solution, it's become a huge problem.
We've already established how passive investing is better for you financially in the long term, but it can also spare you unnecessary stress. Of course, financial markets are bound to go up and down, but as long as you've taken care to spread your risk across different asset classes, there's no need at all for your mood to go up and down with them.
With the active path, there's always a self-doubt. I knew I should have done this. I knew I should have gone out there. There is a certain transformational experience that goes on with accepting the notion of market efficiency, which there gets to be, let's call it an aha moment, where people go, aha, that's the way markets work. And once that happens, they're much more accepting of the fact that markets go up and go down. I mean, they always have and they always will. And there's, it leads to a better overall experience. And where experience to me means more than just having better returns. It's a better lifestyle as well.
I think passive investing is a good lifestyle choice because as far as I'm concerned, money is something that supports your life. It's not something you should be thinking about, worrying about, fearing about, racing after all the time. It's something that should be kept in its place, underneath you. And the great thing about passive investing is it works. And all you need to do is put your money in, ideally wrapped in an ISA if you can, or put in a SIP or whatever, and leave it there.
The beauty of passive is that because it's a rational approach rooted in mathematics, it takes the emotion out of investing. Emotion, you see, can seriously damage your wealth.
It is human emotion, it's behaviour that drives stock markets up and down. Take away that sort of irrational behaviour, as it were, and you get a more sort of sensible level of investing, which is the way most people invest. They invest over time, 5, 10, 20 years.
Well, we have to remember that the media doesn't like neutral stories. They only like the rather extreme stories. So it's easy to get swayed by the media. And of course, men are avid readers of financial pages, and we know that women aren't. And there may be something in that, because men also are more likely to react to what they read, to talk about it again with perhaps peers and colleagues, and to feel that they have to act upon it. And I think the secret of the good investor is probably to be able to tune out a lot of what goes on in the media, because it probably isn't particularly useful.
We tend to want to be in tune with the people around us, because human beings are such social creatures. And again, the reason for that is evolutionary. And so when everyone else is buying, we tend to want to buy. When everyone else is selling, we want to tend to sell. And that means two things. It means that markets can be very unstable. If everybody's buying at the same time and then it turns around on a dime and everybody starts selling at the same time, you get a great deal of volatility. And then you also wind up doing the wrong thing at the wrong time.
By constantly buying and selling the funds, or buying and selling individual stock, that ratchets up the costs even more. Our philosophy is you rebalance according to the way the portfolio should be sitting. So what I mean by that, if you're supposed to hold 40% in equities and 60% bonds, and it goes to 50-50 or 30-70, that triggers a rebalance. And the beautiful thing about rebalancing based on percentages, it takes away the emotion.
I think a passive approach to investing is a way of protecting yourself against some of this unnecessary stress that people get from over-churning, over-monitoring their investments. So really, a good plan that's only visited perhaps by an annual review will be enough, and you can spend the rest of your time enjoying your life and doing things that are less stressful.
So, to sum up, money worries in general and poor investment decisions in particular are major causes of stress. Rational analysis produces sensible investment decisions. Emotions lead to bad ones. And for better returns, stop fretting about your investments and enjoy life. An annual review is all you need.